Welcome back to our channel. In today's video, we'll be addressing two important questions that home buyers often have. How much money should you put down when buying a house? And should you ask sellers for allowable costs? So let's dive right in. When it comes to deciding how much money to put down when buying a house, there are a few factors to consider. Let's start with the down payment. The down payment is the initial upfront payment that you make towards the purchase price of the home. The amount you put down can vary depending on the several factors, including your financial situation, loan type, and goals. In general, lenders typically require minimum down payment of 3% to 20% of the purchase price. However, it's important to note that a higher down payment can have several advantages. First, a higher down payment can help you secure a lower interest rate on your mortgage. Lenders often offer better rates to borrowers who have a larger equity stake in the property. Second, a higher down payment can reduce your monthly mortgage payments. By putting more money down up front, you'll have a smaller loan amount and potentially lower monthly payments. Lastly, a higher down payment can help you avoid private mortgage insurance, PMI. PMI typically required for borrowers who put down less than 20% and can add to your monthly expenses. Now, let's talk about asking the sellers for allowable costs. Allowable costs, also known as seller concessions, are when the seller agrees to pay a portion of the buyer's closing costs. Seller concessions can include things like paying for the buyer's title insurance, covering part of the loan, origination fees, or even providing a credit towards repairs. Asking sellers for allowable costs can benefit buyers in several ways. One, reduce cash outflow. By having the seller cover some of the closing costs, buyers can reduce their upfront expenses and have more cash available for other purposes. Number two, negotiating power. Asking for allowable costs can provide buyers with negotiating leverage during the home buying process. It can be a way to offset some of the costs associated with purchasing a home. However, it's important to consider the potential implications of asking for allowable costs. One, seller's perspective. Sellers may be less inclined to agree to allowable costs if they have multiple offers or if the market is really competitive. It's essential to assess the seller's motivation and market conditions before asking or making a request like that. Two, purchase price consideration. If sellers agree to cover allowable costs, they may factor those costs into overall purchase price. So it's crucial for buyers to evaluate whether the overall deal is still favorable after accounting for the allowable costs. That's it for today's video on how much money to put down when buying a house and when to ask sellers for allowable costs. Remember, the amount you put down as the down payment can impact your interest rate, monthly payments, and potential savings on private mortgage insurance. When it comes to asking sellers for allowable costs, consider the market conditions, sellers' motivations, and overall deal. If you found this video helpful, don't forget to like, share, and subscribe to our channel. From us at Home Premier Group, we wish you a great day. See you later.